Welcome to Explore Protech YouTube channel. It's Dr. Meiya, your host here at Money Magnet. I welcome you. If you're new to the channel, welcome. You came to the right place where entrepreneurs and business people come to learn and increase value for their entities and their businesses. We're in the series of business valuations, and today we are dealing with the book value or book value valuation model. As you will remember, we've been saying the whole thing about business valuation, it's both the science and art. Bringing the two together gives you a perspective and a better valuation. The science of it is predicated on using objective measures, estimates, and the modeling capabilities. The science, the art, however, it's revolving around the experience, the exposure, the practice, and the knowledge and the know-how on which model to use under what circumstances or what combination of valuation models to use. So today, a model that we'll be looking at is the book value. We've done the market capitalization times revenue model, earnings multiplier, and discounted cash flow. A book value, very straightforward, very easy, very sweet, and I urge every entrepreneur to value their entity after this to give them an idea of what their company is, at least at their book value, because you don't need very complicated or complex valuation knowledge. Really, the book valuation model, it's nothing but the net asset value of the entity, and you calculate it by netting the liabilities from your total assets. That includes your intangible assets, those are patents and goodwill. Now, there are really three things to focus on when you're doing the book value. I've already said you look at the net difference between your total assets and your total liabilities. What I need to highlight here is that when you look at your total liabilities, you may choose not to consider the shareholders' equity, because in fact, this is what you're trying to get at. And secondly, it really reflects what the shareholder will get if the company was to be liquidated. I mean, while it is the minimum focus if we are to liquidate the company, you don't need to wait for liquidation. I mean, every business person could just have a flag point to understand, at least from the book point of view, what is the value of this entity. The key thing to also realize is that the book value is usually lower than the asset market value of the entity. Now let's pause there. You will expect that because it's a book value, literally speaking, because the assets value is what they've been captured or recorded in your books when they were acquired. Now some assets will have appreciated and some assets will have depreciated. Now, because we're looking at what they were recorded at, this makes sense that when you're using the book value approach, you will always expect it to be lower than the market value. And once you've done the net of the two, you can just divide that by the number of shares the company has or the number of shares outstanding to understand the book value per share. So as I said, sweet and straightforward. What are the take homes from using the book value approach? What are the uses for this? As I said, it's really a theoretical approach of understanding what the shareholders of the company will receive if you are to net at this point in time from the balance sheet point of view, the value of assets, you're subtracting the liabilities. That's what the shareholders will get. And if you've got more than one shareholder in the company, you divide it by the number of shares, and that gives you an indication of what each shareholder is worth as far as that company is concerned. And lastly, if you compare the book value to the market value, you can also use that as an indicator of whether the company or the stock or the share is over or undervalued. I hope you enjoyed the conversation. As you can see, the book value approach is very straightforward. You can just open your balance sheet from your financial statements and you should be able to calculate the book value for your company. It's Dr. Meiya here at Money Magnet at Explore Protect YouTube channel. I hope you enjoyed this. Remember, as I've said, if you're new here, please subscribe to the channel, set on your notifications, and comment on this video. If however you want to have a conversation with me, below this video are my links. We can have a conversation, or drop me an email at drmeiya@financium.com. Have a beautiful day.